Hello, good morning, everyone. This is Kathy Lean. I'd like to say good morning, do a sound check. Let me know if you can hear my voice. Let me know if the video, my face is coming through. It looks like everything is working well on my end. Hold on one second. Let me just get all my chat boxes in order. And let me know that everything is working. Good morning. Tell me where you're coming from. Hello, Yasmin from the Philippines, Marvin from the Philippines. Welcome, everyone. Welcome, everyone. Also on Twitter Spaces. We are showing video on YouTube. So please, there's a YouTube link that I'm going to be dropping in. So if you want to see the charts and the screens that I'm showing you, please come in through YouTube because I'm sharing more content there. You can also just go on my feed and click on the YouTube link right underneath the video. And I'm just dropping the YouTube live link underneath this as well. Okay, we have so much to talk about this morning, and we will dive right into it as soon as I just make sure that everything is in order. We'll talk about gold, we'll talk about the Nikkei, we'll talk about the Dow, we'll talk about everything that is happening in the markets. And so we might as well just start with the charts showing what's going on in the markets. And I want to start with this. This is the Dow. And right now, if you see my upper right-hand corner, there is no question right now that we have fear and panic in the markets. 1,000-point decline in Dow futures. Hello, everyone, by the way. Welcome to our Caffeinated Market Buzz, where we talk about what's happening in the markets right now, what is expected in the coming week, all of the big events. What's really interesting is that last week we had the big data events, but this week we kind of have the big moves. The week is new. I mean, today is certainly just the first few trading hours of Monday, but this could be a taste of what is to come for the rest of the week. And for those of you on Twitter Spaces, I'm showing my charts, my screens on YouTube. So hop over there if you want to see the charts. So right now, we have a 3% drop in Dow futures. And if the stock market closes down 1,000 points, if the Dow closes it down 1,000 points like it is right now, this would be single-handedly the worst day since September 2022. And so we always like to go back in our charts and see when we have such a weak day, what does that lead to in terms of performance? This day over here that we're looking at is 1,000 points from open, and it's 900 points. This is the 1,000-point day that we are talking about. I'm going to put my arrow. And once again, if you are on Twitter Spaces, welcome, welcome. If you want to see the charts as well, come on to the YouTube live stream. So if the Dow closes down 1,000 points, this would be the worst performing day for the Dow since September 2022. And when that happened in September 2022, what happened next? Does such a sharp decline in the Dow lead to recovery, a relief rally, a bounce, or does it lead to more losses? Well, take a look at this chart here. It's certainly different because in September, the 1,000-point drop in the Dow came after 4 days of gains. Today, the 1,000-point drop in Dow futures is after a few days of losses. So it's slightly different. But what it does tell us, as you can see here, is that after that day, we were at 31,000. And then we dropped down to 28,000 and change. So that's another 3,000-point drop in the Dow. Did it happen immediately? No. There's a bit of consolidation before an additional push lower that you saw here. But yet, one thing is for sure, which is that rallies were sold. Go back over here on this chart. And then for those of you with our Twitter Spaces, like I said, I'm showing you my charts on YouTube. This was the 900-point drop in the Dow, which, we may end up that like this today. We had the 900-point drop in the Dow, and that was also followed by additional continuation. So going to today, we have a 1,000-point drop in the Dow futures. And we do have a little bit of support. We can't ignore the fact that we have some support right over here, which is the spike low from June 11th, as well as the spike low from March 5th. So we have a few layers of support. We have layers of support at 38,000, just under 38,500. And the more significant, and a more significant layer of support at I can't even say 38,000. It's 38,000, but what it really is 37,858. So there's a lot of layers of support beneath that level that we have not quite gotten to yet. So this is the huge move that we saw in the Dow. We'll talk in a second about why it happened. But no move is as large as the move that we had in the Nikkei. Wow, look at this. Biggest move, 12% drop in one day. That is basically screaming bear market territory. 12% drop in one day in the Nikkei. And this is the largest one-day decline that we've had in the Nikkei since Black Monday in 1987. And, if you're just learning a trade or you've been trading for a very long time, it doesn't matter. You should know that bear markets are much quicker, more aggressive, and more extensive than bull markets. Markets fall faster, further, and longer than you could anticipate. And that is what could happen in the Nikkei. First off, there's no support in the Nikkei for another 1,000 points, which seems like nothing in the light of what happened last night. And the connectivity of the world matters. The connectivity of the world is the reason why Dow futures is one of the reasons why Dow futures is down 1,000 points this morning. So right now, let's take a step back and think about what it has caused this risk-off sentiment in the markets. And the reason why investors are in fear and panic mode is because they know that, there's always more than one cockroach in the closet. When you have weak data, it usually gets more weak data and then more weakness beyond that. And it starts with what was once the most resilient part of the US economy, and that was the labor market. The labor market was the only thing propping up the US economy, and that, kind of gave way on Friday. We had horrendous labor market numbers, non-farm payrolls from the US on Friday. Every piece of that report was softer. And now investors are thinking that, that the weakness of jobs is going to lead to a retrenchment in consumer spending, which is going to lead to a retrenchment in growth. And so, all of that is, what the market fears. The market fears that not only did we have 1 month of weak non-farm payrolls, but we're going to get more months of weaker non-farm payrolls going forward. And that we are going to see also, weakness in consumer spending. We're going to see further weakness in inflation, because if you think about it, when growth and employment and spending slows, that's going to lead to the inability to continue to raise prices, and also the maybe push to lower prices, to discount. And if things continue the way they are, Black Friday this year could be very, very attractive. But, that is what the market's worried about. They're worried about fear and panic, not just here in the US, but in many corners of the world. And the reason why the Japanese stock market is down the most, the reason why the Japanese stock market fell 12% is because currency values matter. And, the sharp rally in the Japanese yen, take a look at this. Dollar yen went from 162 down to 142 in I don't know, like 3 weeks or something like that. And I think this is like a 14% move maybe. The point that I want to make, aside from the fact that I top tick dollar yen and I traveled to Japan at 160, I'm going to constantly pat myself in the back for timing my vacation to Japan right, because now it's 14% more expensive. But the point I want to make is that this not only hurts tourism, tourists feel this with a delayed effect, but this hurts businesses. And the fear is that this 14% surge in the value of the Japanese yen is going to lead to the improvements that we've seen in the economy kind of evaporate, and it's going to lead to Japanese businesses, which were just beginning to recover, start to suffer again. And that's why the stock market in Japan fell so much. And I said that the world is interconnected. And the world is interconnected. And when you have a crisis, I'm not calling this a crisis, but you're having a potential crisis in Asia, that's going to spill over to other parts of the world. And it's going to feel even more painful when there are problems in US as well. So there are two questions to ask. One, what does this mean for the US markets? And two, can the selling last? Well, first off, the most important thing, and I don't know if Fed Fund futures have changed fast enough. Let's take a look at this together. And for those of you that are on Twitter Spaces, X Spaces, I'm showing my charts and screens on YouTube. Click on the link beneath this video to watch them. But what I want to show you is Fed Fund futures. So we're looking at the September contract. So it looks like it hasn't quite changed yet. The market is right now pricing in, what is it? And actually, no, it's pricing in a 80% chance of 4 3/4% rate cut. Sorry, 4 3/4% to 5% interest rates in the US. And so basically a 100% chance of that happening, and then a 20% chance that rates could be taken down to this 4.5 range. So what this means is that the market's pricing in a 100% chance of a 25 basis point rate cut in September, which is kind of interesting because this means that, actually, no, I'm sorry, 80%, 100% chance of a 50 basis point rate cut, because right now the Fed funds rate is at 5.25 to 5.5%. So it's pricing in a 100% chance of a 50 basis point cut in September and a 20% chance of a 75 basis point cut. And another thing on top of that is that the market is talking about the possibility of an emergency interest rate cut by the Federal Reserve before the September monetary policy meeting. Now, for those of you that don't have this on top of mind, the next Federal Reserve meeting is on September 17 to 16. Sorry, 17 to 18. And so that is basically 6 weeks from now, 5-ish to 6 weeks from now. So 5-ish to 6 weeks from now is the next Federal Reserve meeting. And they're thinking that the Federal Reserve could deliver an inter-meeting cut. Is it necessary? Right now, no. Yes, stocks have crashed quite a bit, but we're not at the level of weakness that I think the Federal Reserve is going to come with the intermeeting cut. The level of weakness that we would need to see an intermeeting cut is, first of all of this year's gains erased. So all of this year's gains erased would put us at 36,383. So another 1,500 points, I think, below current levels, which doesn't seem like much in the Dow. But at that point is when I think discussion about an intermeeting cut is more serious. But as I said, when we have sell-offs in the markets, today we have service sector ISM. They are always, bear markets are always quicker, more aggressive, and more extensive than we anticipate. So faster, quicker, and further. So there is scope that we could easily in the Dow slip down to this low over here. And as I said, those of you that are on Twitter Spaces, I'm showing charts on YouTube. We can easily slip to the April low of 37,500, which is another 1,000-point lower, which, you know, doesn't seem like that much, but I think it is. And so we could easily slip another 1,000-point lower before it stabilizes. And so, you know, yes, it can fall further. In terms of dollar yen, the natural support level, we're looking at dollar yen right now. Let me just get rid of my drawings here. But the natural support level is obviously the 140 level in dollar yen. But just beneath the 140 level, and I'm just drawing some fib retracements here just to get this right. But basically, 130, and I think this is the correct one because this is where we also kind of broke out from in September. And we also had a support level in June. So right beneath 140 is going to be 138.74. The actually, no, let me remove this. This is the one that is the right one. Yes, so right, it's going to be 137.90. And so there is scope for it to break through a 140 level, which is where we have the psychologically significant level. And I guarantee you lots of stops are set at that level. And then if it happens to break below that level, we could tumble down to 137.90, the 38.2% fib of the August 2016 to the rally that we saw this year. And so that is where we could have. We do have a 23.6% fib of the 2011 rally to this year's high. And this also sits at a pretty interesting level. And I think it's right where dollar yen stopped today, or will stop today, 140, 150. So I think dollar yen today could drop back down to 140, 150 if we have a weaker service sector ISM report. So stock markets could fall another 31,000 points. Dollar yen could fall down to 140, 150 if it finds, before it finds support, down to 140. Now, in terms of the general market, what we're also seeing is we're seeing a widespread carry trade unwind. So when we have carry trade unwinds, once again, they could be much more aggressive, much more extensive, much faster than any of us would anticipate. And we see that in Euro yen, we see that in a lot of the major currencies. And so carry trade unwind after such an extensive move could continue. We have service sector ISM today. And what I think is going to happen is we're probably going to see a push lower to retest this 140, 150 level in dollar yen, and also probably another 1,000-point move in the Dow. And then we may end up stabilizing a little bit. I think that these huge candles, these huge moves we saw last week as well as this week are nearing an end. We should continue to see red candles, moves lower, but probably much more like if we go back to September of 2022, which is the last time we saw such a big move lower in the Dow. That even if you look at these candles over here, these huge sell-offs in the Dow, the candles that follow are smaller. They're not as large, but they're in the same direction. So I think we're going to see more weakness in stocks. We're going to see more weakness in the yen pairs, but of smaller magnitude going forwards. So looking at my heat map, I'm still bearish dollars. The expectations for a Federal Reserve interest rate cut for 50 basis points is fully priced in, and now the market is looking for a potential for an intermediate cut. I don't think it's going to happen. And I think, I'm not sure whether or not we're going to hear Powell actually say anything, but we do have Jackson Hole. And Jackson Hole, the Federal Reserve's Jackson Hole meeting, I'm just pulling that up on my calendar, is in August. And let's see exactly when. August 22 to 24. So we still have a couple of weeks between now and then. So August 22 to August 24 is when we have the Jackson Hole meeting. And so maybe then the Federal Reserve might telegraph something, but you should remain bearish dollars going into that. Euro is actually surprisingly one of the best performing currencies. It is up almost 1% today. 110 is clearly resistance in the euro dollar. I think that it will retest 110 and maybe even extend to 110.50. Euro and sterling right now are being seen as kind of the safe havens on the US dollar unwind. And that's because, first of all, BOE cut rates last week, and they were kind of wishy-washy on whether more is to come. And Euro ECB is expected to cut interest rates next month, but at this stage, although it certainly can and it could very well change, they think the ECB is going to cut less than the Federal Reserve. I mean, the ECB is only poised to cut 25 basis points. The market's pricing in 50 basis points for the Fed. That is why the dollar is down against the euro, because more easing is expected from the Fed than the ECB. But I think it's hard for me to imagine that the ECB is going to trail that far behind the Fed if the Fed's going to be cutting so aggressively. But still, we're neutral euros, we're neutral pound this week because there's less data from those countries. Also, Eurozone inflation data was better last week. So it's really going to trade all based on the market's appetite for US dollars. We do have a Reserve Bank of Australia rate decision. RBA has historically been one of the least dovish central banks. In some ways, you could describe the most hawkish. And data from last week, the Australian jobs report was really good, so data has been good. But in light of this global sell-off, I think it's going to be the RBA could remove the rate hike reference from their statements. And if they remove the rate hike reference from their statements, we could very well see some additional sell-off in the Australian dollar, which has already hit a one-year low this morning. We also have Chinese data, Chinese inflation data, Chinese trade data, and so those numbers could be softer as well, leading to weakness in the Australian dollar. I'm also bearish CAD. BOC cut interest rates, said more to come. This week we had CAD jobs report, and we have IB PMI, we have trade data, all of which are expected to be lower. Same story with Kiwi. Kiwi jobs reports are expected this week. That is also expected to be lower. But at the end of the day, data from these countries are reinforcing the risk-off sentiment. It's reinforcing the risk-off sentiment, leading to pressure on these currencies. And I'll talk about gold in a minute. I know many of you are asking about that. And the carry trade unwind will continue to drive the Swiss franc as well as the Japanese yen higher. The Japanese yen certainly higher than the Swiss franc, but it should drive both of those major currencies higher, even though Swiss data has been weaker. And I think that this kind of raises the odds of an additional third interest rate cut from the Swiss National Bank. Okay, so for all of you asking about gold, yes, gold is supposed to be a harbor of safety, and oftentimes it is. But when you have such an extensive risk-off move, and why not look back and see what happened in September as well? September, when we had that huge sell-off in gold, we also had, huge sell-off in U.S. stocks. We also had an additional sell-off in gold before it stabilized because investors are just selling everything. But you're not going to see as much of a sell-off in gold than you see in equities, which is why gold equity spread could be really interesting. The gold Nasdaq spread, in particular, could be very interesting. But right now, gold is falling. It's found support at the 50-day SMA, which matters. I think that we see a little bit more weakness down to 2340, but I really don't see much more beyond 2340. If we look at the shorter term charts in gold, you do see it bouncing already. Maybe we'll see some sellers. I think right now you can squeeze up to 2410, and then maybe we'll see some sellers come in around 2410 in gold. So that's what we're looking in terms of the heat map. As I said, last night we had some weaker downward revision to Japanese PMI. Chinese data, it was mixed. Australia inflation expectations actually stronger. Today we have ISM services. That's the most important report from the US. Internationally, we had upward revision to German PMIs. We had an upward revision to UK PMIs. That's why Euro is stronger, because inflation data, PMIs were revised higher. Unfortunately, the market is looking for a rise in ISM services. And given the drop in non-farm payrolls, it's going to be very hard for me to imagine that we're going to see this rise in non-farm in service sector activity. So if that drops, particularly, I'm not sure it's going to happen. That's good. If it drops below 50, then that's going to be the catalyst for the next move lower and maybe even the 1,500 point drop in the Dow. And next move lower in dollar yen, as well as the U.S. equity market. We're past the quiet period from the Federal Reserve, so I think we're going to start to hear some concerns from Federal Reserve officials, which should reinforce the expectations for a bigger move in September. Japanese household spendings are coming out tonight, some ancillary data from New Zealand, and then tonight we have the RBA rate decision. And as I said, RBA not expected to change interest rates, but I think they're going to drop that rate hike call, or that possibility, leaving that rate hike statement in their the RBA statement. And if they do that, that is probably going to end up being more negative for the Australian dollar, because they'll be no longer talking about interest rate hike. Switzerland has jobs data, retail sales numbers, which I think is probably going to be weaker. Eurozone has retail sales numbers, which are also expected to be weaker. Canada's trade data, which should be stronger. US trade data is not going to matter at all, in my opinion. Then we also have New Zealand labor market numbers, which I think are going to be quite ugly. The Australian PMI reports. And then on Wednesday, we have German trade data, which should be a little weaker, just basically weakness all around. That will also lead to weakness, in my opinion, in those equity markets as well. Canadian IBPMI probably going to be weaker as well. I think CAD has more downside along with that, particularly against the euro. Chinese trade data expected to become in lower. I don't even need to go through the calendar to tell you that most of the data is expected to be weaker this week. But Chinese inflation data is important. And then also Canadian jobs report, which is expected to be important. So those are the main reports this week. It'll be less focus on the dollar after the ISM services report, but much bigger focus on everything else. And then in terms of charts, we already looked at the charts, talked about how gold is bouncing right now, could probably squeeze up to 2410. I think it will. I think that you're gonna have sellers between now and 2410 with a possible retest of the 50-day SMA. Euro, heading back. We talked at the beginning of this conversation, and now is going to head back towards 110. It's going to go above it up to 110.50, in my opinion. Pound dollar holding steady. I think it's going to turn positive for a move up to 128.50. Dollar yen has more downside. It's going to come down. I think it's going to drop to test 141.50 minimum. Dollar Swiss. We're going to have to go to the longer term charts to find support. But you can see here that support is going to be in dollar Swiss at 83.70, which is the previous low. And I think that, we'll probably end up testing these levels here. Aussie dollar, huge reversal candle today. We have to respect that. We have RBA tonight. I think that I still think Aussie is going to fall off the RBA, because I think they're going to remove the rate hike reference. If they don't, that's going to be wildly positive. So I think that, we're going to stabilize here and then maybe move lower again. Kiwi dollar, moving off of US dollar flows. I'm also a seller of Kiwi dollar, but dollar CAD, we're moving lower. I would stay out of this trade. I would not be long CAD or dollars. I'd be looking for an opportunity maybe to buy around 137.62. All right, I know Boris wants to say hello. Let me see if there's any questions. Yes, VIX is soaring. Don't buy stocks. Bear markets are very aggressive, very fast, and much more extensive than we would anticipate. So definitely be leaning towards more weakness than anything else. So fear and panic has gripped the markets. Any charts that you want me to look at with you? Any questions? Boris is here to say hello. And markets matter. Keep joining us for our live streams this week. We have a lot to talk about.
Hi guys. Hey everybody. I'm going to grab the screen. We don't have much time, so I just want to share with you a few things. Let's make sure we share my screen. Screen 3. Okay, here we go. You guys should be able to see. Yep, you're seeing my screen. So obviously, massive moves. I posted in YouTube comments a couple of links, one of them to my Twitter feed, where I told you when the circuit breakers come in. There's a lot of talk now amongst all of the people on FinTwitter, who I respect a lot, who are basically saying that really these kind of panic sell-offs don't end until the circuit breakers come in. That's 7% from here. That's quite a while still. We tested like down 5% and bounced. We're basically up a couple hundred points off the low in NASDAQ. NASDAQ is almost down 1,000 points, which is insane if you think about this. S&P is down, is up almost 100 points off the lows, but it could very easily drift right back below that. To me, the really big level, the absolute critical level, and it's also the same, I think the same level that dovetails with the circuit breaker is the 5,000 level. The 5,000 level, you know, the massive, we were at 5,500 just a couple of weeks ago, so you maybe even 10 days ago. So you're looking at a 10% shave in less than 10 days, obviously very, very important. In the meantime, you know, trading has been awesome, absolutely awesome. The indicator that I improved while I was in Vegas is just been killing it. I'm going to talk to my guys about it when we go into live trading in the next 15 minutes. I put a link if you guys want to join us and become a member. There's a discount link in the. I'll put it in right now again into chat. So if you want to come join us, get the indicator, trade with me, be awesome. If not, tomorrow I'm going to be trading live on YouTube. Wednesday I'm going to be trading live on YouTube. I'm going to discuss exactly the improvements I made that made this razor sharp. These are days we'll live for. I mean, these are the kind of days we'll live for. It's 5% up, 5% down creates massive amount of opportunities. I'm already having this is my Trader. I have 2 TraderVate accounts. One of them I started this account when I went to Vegas, which was a day ago, and I'm literally $150 away from getting funded on the 25,000. And the other one I started just like I think on Friday. I'm at 450. This is my results today. Actually, no, let me go back to from 4. Yeah, I'm like about $250 on this account in just the last 12 hours. The day is still ahead of us. I think I might be able to run this up to like 26,000 pretty quickly and try to get both of these accounts funded by tomorrow. So come join me, see how it goes. It's a lot of fun. I am trading nothing but the smallest things. I'm trading micro contracts and just banking it because the volatility and the precision of the indicators is just so good. So looking forward to trading with everybody, looking forward to getting more accounts funded on the prop side. If you want to know exactly how we do that, come join me in YouTube Live. We'll talk to you about it and we'll show you how we do this with all of our indicators. Any questions over here for you guys? Let's see if you have any questions for us as far as trading. Just remember, as I said, the really, really big level that everybody's going to be looking at on the S&P 5,000. That's going to be critical. If we manage to get down there in a sheer panic mode at the end of the day, there will be lots and lots of calls for Fed emergency rate cut. There'll be a circuit breaker and things like that. Also, the other thing you need to understand, and today may be unusual, but generally, if you get a panic, the markets sell off on Monday, rally on Tuesday. So if we sort of settle on the lows today, and you're punting, it may not be a bad punt to be buying on the lows today because they'll probably open it up higher tomorrow. So we'll see how it plays out, but very exciting, lots of fun. Having the great tools to help me pick the spots really, really makes it easy. So I'll see you guys in live, and I'll see you guys tomorrow in YouTube for everybody else. Everybody enjoy, have a great day, and stay safe out there. Take care, guys. Bye-bye.